Hey guys, thanks for tuning in again. Today is February the 20th. We're going to be going over the trades I took today and also a little bit about the overall market sentiment. So looking at the screen right now, this is the S&P 500. As you can see, we've come up to this area and we're getting close to this 280 area where we have this previous triple top from the end of 2000 towards the end of 2018 where we had this triple top or W-like pattern before the big sell off. So we are reaching up to test these levels, and with this in mind, we are keeping this previous 280s level in mind for a possible place where the market could reverse or slow down. So let me just change a few settings here so y'all can see my lines better. So this is going to be a key level right here, this 280s level where I have this big white line. So coming into today, if I zoom in here on sorry about this guys, hold on. If I zoom in here, we can see this is Friday's trading and this is Tuesday. We had Monday off for President's Day. Now, we can see that Friday opened, gapped up higher from Thursday above the high of the previous 2 days, and we gapped up and then continued to push up and closed up near the highs. Now, on Tuesday, we opened trading lower near the open of Friday's trading, and we pushed all the way back up, engulfing the previous day's price range. This action, when a stock moves up past and closes above the previous day's price, is known as a bullish engulfing candle, and this is a bullish sign. So we would typically look for a complete overlap of the previous day range, and as you can see, we didn't quite get that, but nonetheless, it is, or at least I took this as a bullish signal. So with yesterday's trading price action in mind, I was coming into today's trading with feeling that we would see some type of push up from yesterday's price range, which you can see here, we did push slightly higher and close above the previous day close. So I was watching a few stocks on my watch list and marked them out on pre-market levels, but I kind of missed some opportunities there, and I ended up taking trades on some larger cap stocks, Alibaba and NVDA, and instead of going over, because of time constraints, instead of going over everything and all the stocks I was watching, I'm just going to focus on my trades for the most part. So let's get into the first trade that I took, which was on Alibaba. So Alibaba, I was first watching, it was called out in a group to be on watch because of um, its price action here. It looked like it wanted to break above this consolidation area where it was holding support here over 265. So we were gapping up slightly pre-market compared to Tuesday's price action, which was a very strong bullish candle. So I'll just get right into this. My first downfall was I didn't have any levels marked off here for BABA, and I started watching it just because I heard someone mention that they were trading it. Someone in the group took Alibaba long right sorry, let me switch my drawing tool here, guys. Apologize. So someone in the group took Alibaba long right about here in this area, and they sold out up here near the highs on this big push. See this pattern here is it could be a W pattern. You see the W forming, and it could also be kind of a bull flag pattern because we have this strong push up and a sideways consolidation after that, but hold support here over these levels. Um, Sorry guys, let me just edit this one more time. So we have that now. So like I said, the guy who I heard, he took his trade right here and sold out into here. Now I don't like to, I don't ever shadow trade people, or I try not to unless I do my own reasoning. So I watched him take this trade, and I told myself, and a lot of times after they have a strong push up like this off a W pattern, they will come back down and retest the previous levels from these candles over here, and they'll come back down, retest that, and then shoot up from there in that manner. So that's what I was waiting for. As you can see here, we got a huge pullback, and this is where I took my position after this huge pullback. Now, I took a position here long with I believe 200 shares. I'll show my trades in a minute, but this might have been my first mistake because typically if a stock's going to continue to run, it'll only pull back to these previous high candles like I just stated and then run like this hypothetical situation I have drawn out here. As we can see, it sold off a lot further, which gave me a better entry, but at the same time, it showed a sign of weakness, and it indicated that the stock perhaps was not as bullish as I would have liked it. So that was mistake number one. So let's get in here, and I'm going to show my trades, and I'm going to also remove these drawings. Now, so I took 200 shares here at 172.09, and my stop loss was a break of 172. So that would have been roughly a 9 to 10 cent stop loss on 200 shares. So I was risking about $20 on that trade. Considering this, I actually could have gone in with, considering my $30 loss limit on each trade, I could have gone in larger with 300 shares, but I did not. It's a good thing I didn't. But we did get some, so we did drop slightly below my 270 level, but we immediately got bought up. So that's why I didn't stop out there and sell my shares and get out, because we got bought up immediately. So I decided I'd hold through, and it was kind of curling up like I liked it, as we can see here. And I held on, and I did not size out, and then we got this drop, and I sold out at 171.01, just above my stop loss, because my theory was irrelevant at that point. I wanted to push up. If I had a pullback, I didn't feel good, so I sold above my stop loss because I didn't like the price action. Now, it's a good thing I did because we got this huge drop, and I would have been down a good amount had we not. I would have lost easily $100 or $120. But instead, I got out, stuck to my stop loss. I reacted very quickly, and I got out of that trade for a $16 loss. So all in all, could have done better. I really shouldn't have taken this trade. Should have been more patient, and just kept looking around for other available trades. So moving on to the next trade. The next trade that I saw was NVDA. So NVIDIA, strong. Let's just look at the daily time frame real quick. Oops, sorry guys. Let me take my trades off because that's too much. All right, so daily time frame here. Um, so we had a so for those of you who follow me, I've been trading NVIDIA in the past, and we're coming up and testing this 160s level here, trying to close this gap. And a few days ago, we pushed up above the 160s level, but we sold off very quick. We opened up above 160s, and this was the earnings after earnings. Actually, we opened up strong and we sold off. So, um, I was looking. I saw the price action. I really wasn't prepared. I should have done more homework or not traded this since I haven't been watching the video too much lately. But I saw this huge push up here, real strong push, and I saw it consolidating and forming a base right in here. Sorry, guys. So I saw it forming this base section in here. So my original plan was to go long where this. Sorry, let me try to get a better view. So my original plan was to go long right here where this arrow was. The problem was I saw this resistance level, the strong resistance level up here at 160s, and I didn't think about my stop loss quick enough, and I couldn't do the math quick enough to determine proper share size to take that trade, and I wasn't confident enough in my share size and my risk to reward ratio. So I had to assume that I would take profits here at 160, and again, I hopped into the trade. I wasn't pre-planning, so that's why I didn't take that trade, which would have been a nice trade if I had took it. Instead, if we see this volume bar here, I waited for this strong push. The volume green bar here is much bigger than the rest of the bars here. See, this green bar is even higher than the opening 9:30 a.m. volume, which is you don't really see that much, and that's a sign that that's a very valid move through the 160 resistance level. So after that happened, I saw that move through resistance on big volume. That's when I took this trade. So let me get in here and show my trades real quick. So as we can see, try to get the best view for you guys here. So as we can see, the price moved up real strong to this 160 level, and then I waited for a pullback. It pulled back, and I bought as close to 160s as I could, um, and I used the 160 level as a stop loss with 100 shares, and I had to stop out of this trade almost immediately for a $22 loss, a 22-cent loss on this trade. Now, in hindsight, perhaps my stop loss should not have been a break below 160 because I'm starting to notice that a lot of times these stocks they'll move slightly below these whole dollar levels, especially when they're higher price stocks such as this trading at the 160s range. I should have actually had a better stop loss level, perhaps down here, at the lows or below the lows of this previous consolidation area, and I could have gone in with smaller share size in order to create a proper risk for my trade. Now, so after that trade, I stopped out and it dropped right below, shook me out, and then immediately shot back up, just like I was anticipating, but I just didn't give myself enough room. So I saw it come down here, bounce at the 160s, and this hard red candle, and the market was dropping, but it was still market still looked slightly bullish. So I went long here, 50 shares, and I was going to actually let this set my stop loss at 160 or below 160 and go to the gym and let this 50 shares ride throughout the day and hope for a momentum trade. But I sold out here because I'm not familiar with Thinkorswim stop. And when I set my stop and I did not do it right, so I actually set a limit buy and a limit sell, and I sold my shares immediately. So that was a mess up. That's one thing I got to work on here is getting my stop orders figured out with Thinkorswim. So I'm going to work on that. and it's a good thing that I did because I would have been stopped out here anyways. All right, guys. Thanks for joining in. Stay tuned for the next video.